We begin with the big macro. And guys, go ahead and pick your headline. We've got weekly jobless claims that hit the lowest point in 4.5 years. Consumer confidence hit its highest point in 5 years. And the European Union has won the 2012 Nobel Peace Prize. I think we're all a little surprised by that one. But Jeff Fisher, I'll just start with you. What's your headline of the week?
All right, I'll jump to jobless claims, which were below 375,000, and that is the magic number that signals that enough jobs are being created to lower the unemployment rate. That said, we're not much below that number at all, so that aligns perfectly with what we're seeing out there, which is a very tepid recovery. Now, the Small Business Employment Index came out recently, too, and showed a 2.5% decrease in hiring at small businesses, which are the engine of employment growth in the U.S.
Yep.
So that's not great. But that should pick up as we see some seasonal hiring around the corner for the holidays. One other stat that's interesting and doesn't get reported that much, the Bureau of Labor Statistics says there are
those guys are a total sham.
Oh, yes. 3.6 million job openings right now. 3.6 million jobs open right now. That's up from 3.1 million a year ago, and that's good. There are 12 million people looking for a job. So you could effectively give 30% of these people a job if they qualify and if they're in the right area for the job.
Do we know if they're service sector jobs or
it's
did
spread
it drill
across,
down?
It does drill down a bit. It's interesting. It's spread across manufacturing and construction is high on the list, which is a good sign.
Yeah.
But the problem, of course, a lot of people can't move. Their house is underwater or they're not qualified for their job. That said, the U.S.
There's that.
That's a small problem. But still, when I look at us compared to Europe, we are very fortunate because we have a lot more job mobility than, imagine you're a Spaniard or you live in Greece. You're not about to move to Germany, an entirely different culture and language and whatnot to get a job.
Ron, what stands out for you for a headline for the week?
I like the consumer confidence numbers that came in highest since October 2007, I think it was. It's kind of building on this momentum. You got a 16% up stock market. You've got home prices that seem to be on the rise. Unemployment recently coming down. Consumers are feeling better. That can snowball and really turn into, you feel good and it pays dividends down the road. So I like that.
Joe Maker?
Yeah, I'll follow up on what Jeff said, which I thought was great, and it's tough to expand upon. But I'm not a huge macro guy, but to me, seeing these jobs numbers is definitely heartening and a good signal, at least trajectory of where we're heading.
Am I the only one stunned by the EU getting the Nobel Peace Prize?
We're so stunned we can't
You're
talk
the
about
only
it.
one not. Yeah,
it just seems like the statement was something like, and we're looking over the last 60 years. And I mean, I'm not on the Nobel Prize committee, but I feel like if the EU gets the Nobel Peace Prize this year, then our radio show maybe gets a nomination for economics. I'm not saying we win.
They've had some controversial picks in the past. They've done Yasser Arafat, Kissinger.
Yeah.
And it was strange. It was kind of an encouraging Peace Prize. Here, this is to encourage you to keep getting along.
Yeah. I read some comments, though, from actual citizens of the European Union who thought it was kind of a slap in the face.
Well, who gets the prize? Where does it go? On whose mantle?
I think it's like the Stanley Cup, and then each country gets to carry it around
now
for a couple of weeks.
They'll fight over it now.
Let's get to earnings, which kicked off this week. We will start with two big Wall Street banks. J.P. Morgan Chase and Wells Fargo both reported earnings Friday morning. Joe, they both appeared to have pretty good quarters, and yet shares of both were down slightly.
Yeah, well, the headline numbers were great, and honestly, I had a little bit of trouble figuring out what the market was upset about. When you dig in a little bit, it's mostly around net interest margins shrinking because of low interest rates. On the whole, though, I thought they were both good quarters. Wells is shrinking their bad loan book. J.P. Morgan's got the whole London whale mess behind them, and all in all, they're posting double-digit returns on equity. Balance sheets are moving in the right direction, and the stocks are both very cheap.
Jamie Dimon, the CEO of J.P. Morgan Chase, is getting some headlines for his comment about housing, and basically saying housing has turned the corner. We certainly saw that in J.P. Morgan's results. Do you think he's right?
Yeah, I think so. We've had false starts with housing before, but everyone from Case-Shiller to Redfin is showing that housing is turning the corner. And that's exciting, not just because of job creation. getting back to what Jeff was saying, it's exciting to see a lot of construction jobs coming back. But there's kind of a virtuous cycle to people getting back from being underwater, or I guess above water, on their homes. And that definitely lightens the mood, increases personal wealth, mobility, and that's definitely something to be excited about.
Ron, what do you think? Because we also saw Frank Blake, the CEO of Home Depot, come out and say, well, this is nice, but it could be up to 2 years before he, anyway, is going to feel comfortable calling this a full recovery.
Well, timing is always the wild card. I mean, we had money managers, Bill Miller, and folks betting on a recovery 2 years ago, 3 years ago even, and they have obviously been wrong. It's going to happen eventually. We are starting to see it happen, I think. Anecdotally, my wife's a realtor, and I know it's just one area of the country here, but things are definitely firming up. You got people, bidding wars are back, 2 and 3 people coming in bidding, getting over asking prices. Things are definitely starting to firm.
Yeah, when you've had, and 2 years is nothing given what we just went through. If it takes 2 or 5 more years, and I don't know how you define a full recovery, but just to see a slow, steady recovery, that's all we can ask for. When you've had home construction levels down as much as they have been, depressed for so long, that's feeding the fire. Low interest rates, super low now, around here, 3.4% on a 30-year fixed. I will say, though, when rates finally go up, however many years from now, that, of course, will be a headwind on home pricing.
Costco's fourth quarter earnings came in better than expected this week, and shares hit an all-time high.
Gotta love Costco.
Ron,
Chris.
what do you think? What's the story here?
They continue to get it done. Results look great. There was one extra week in this quarter versus last year, so things look a little bit better than they actually are if you do apples to apples. But still, revenue up 14%, same-store sales up 6%, earnings up 27%. Most importantly, their membership renewal rates continue to be strong at 86% worldwide. Very important
even with
for them.
the increase in membership fees.
Right, a 10% increase a year or so ago.
Yeah.
So they continue to do really great. At $100 a share, we owned it in $1 million portfolio, and I own it personally. I'm not a buyer at $100 a share. I think most of the goodness, the growth coming is already priced in.
I saw one headline that basically said that Costco's results are evidence that big box retailers are back. And so here's my question. Are we putting Costco in the category? Because when I hear big box retailer, I think more of like Best Buy or Macy's or or that sort of thing. It seems like it's a different animal.
It's the membership model. Remember, 75 to 80% of Costco's operating profits come from the membership fee, the $55 or so a year that I at least pay, and I know a lot of folks do. And the value proposition they offer, it's very, very different from something like a Best Buy.
Shares of Yum Brands up this week after that company's latest earnings. Jeff Fisher, what stood out for you when you look at Yum Brands?
On fire. This is the 11th consecutive year of 13% earnings per share growth, 13% or higher. That's incredible
That's
for
nice.
a company this size. About 60% of Yum's profit is generated in emerging markets, notably China. They're opening 1,700 new international stores this year, and 700 of them are in China. But this is what blows me away, really. Yum right now has, they have KFC, Pizza Hut, and Taco Bell.
Right.
Yum has only 2 restaurants per million people in emerging markets, compared to having 58 restaurants per million people in the U.S. So management says we have a long road ahead of us to grow. We will keep growing for years to come. Meanwhile, they have some of the best operating metrics of any business in its industry. They have a return on invested capital of greater than 22% right now. So although the shares trade at a premium to the market, I think it's deserved, and they have a lot of growth ahead.
They still have a large debt load, right? But certainly manageable.
Manageable
it's
with the cash flow,
right,
yeah.
Okay.
We were talking about this earlier today. It seems like when we talk about Yum Brands, we focus a lot on Taco Bell. We look at KFC. It seems like Pizza Hut gets a little bit lost in all of this. Is that sort of the least profitable of the three? Is that when you're looking for growth, are you looking more to Taco Bell and KFC, or is there greater opportunity with those two than there is with Pizza Hut?
Right now, the spotlight is on KFC. That's the big growth driver. But Pizza Hut, they're reinvigorating, and they're starting new little pickup-only stores or delivery-only stores to kind of compete with Domino's and Papa John's. And they have, by broadening the menu at all of their they have some 38,000 locations of all their restaurant chains, and they say they're all underutilized. They can broaden the menu on all of them, including Pizza Hut and KFC.
That's good to hear.
Have any of us eaten at a Pizza Hut in recent memory?
I have.
You have?
Yeah, I have.
How was it?
I love pizza, and it's what I grew up eating, so I'm still anchored to it.
Ron, you look skeptical.
Well, I'm a New Yorker, so it gives me the hives.
Oh.
But I do any pizza's good pizza. All right, I'll go with that.
Yeah, it still has a lot of kick to it as a brand. I mean, and it's taking off in India, China, France. It's popular for some reason in France.
You can email your comments about Ron's pizza snobbery. radio@fool.com is the way to get a hold of us. Coming up, if you're a big fan of mini wheat cereal, we have got some really bad news. Stay right here. You're listening to Motley Fool Money. Welcome back to Motley Fool Money. Chris Hill here in studio with Joe Mager, Jeff Fisher, and Ron Gross. Guys, Coca-Cola is in discussions to invest $10 million in Spotify, the subscription music streaming service based in London. And Joe, I guess my question as a longtime shareholder is why?
Yeah, well, I like that Coke is thinking creatively about connecting with younger customers, but they have a pretty bad track record with non-core deals. For example, in 1982, they acquired Columbia Pictures, which under Coke's reign went on to make Ishtar. I rest my case.
One of the
Thank
biggest-
Dustin Hoffman.
Love
Yeah.
Dustin Hoffman, but I think even Dustin Hoffman would
Yeah.
agree
Yeah,
Ishtar,
it does
not his
have-
finest moment.
I mean, kidding aside, I do really appreciate the commercial side of that just in terms of marketing, but they already have a relationship with Spotify, and you don't have to invest in a company to market with them. And I think that clearly they have a niche that they scratching niches very, very well, and I think they should keep funneling their money towards that and marketing, not making small TechCrunch wannabe like investments.
I was going to say, is part of this just, hey, we've got a market cap of $172 billion. This is a drop in the bucket for us.
It is. I mean, we're only talking about something like a $10 million investment, but it's at a $4 billion valuation for Spotify, which is ridiculous.
Yeah.
Shares of truck maker Oshkosh shot up 10% on Thursday on the news that billionaire investor Carl Icahn is planning to make a bid for control of the company. Ron Gross, what do you think?
Stock's up 50% in the last 3 months based on partly Icahn's bid and the fact that results look pretty strong, and that's one of the reasons I think he's interested. I think it's a kind of a lowball offer, not surprising. He wants to buy at a good price.
Sure.
He's not in the business of overpaying for anything, but he wants control. He wants control of the board. I think he wants to split the company into the defense business and the equipment business. So good for shareholders, but not if he's getting it on the cheap. I'd like to see the bid raised, another several dollars.
What's
at
the
least.
book on Carl Icahn? If you're an investor, if you're a shareholder, and you wake up and you see that Carl Icahn has either bought into your company or is making a bid for your company, should you be happy about that? Does he have the kind of track record that makes you feel better about your investment?
It's controversial. You'll get different answers. I believe he has an exceptional track record, and more often than not, he does create value for shareholders. But obviously, you get into a little bit of the kind of Gordon Gekko Wall Street kind of feeling about breaking up companies and a little Bain Capital laying off people kind of things. But I think overall, he does create value.
Just last question on this, because I know we've talked before about companies like Caterpillar, sort of in the truck space, or at least partially in the truck space. Obviously, Oshkosh not nearly as big or impactful as Caterpillar, but do you think this says anything about what Carl Icahn believes about the broader economy?
The fact that they're posting good results and talking about the future in a positive way is obviously good. They're only a $2 billion company, as you said, tiny compared to Caterpillar. And they make things like fire trucks and cement mixers and things, which are certainly infrastructure related. Fire trucks, not so much. So I think it's positive. I think the things coming out of the company is positive, and the fact that Icahn wants it is positive.
Yeah, I mean, another statement coming out of it is that this is a pretty good environment for activism, where stocks are still relatively cheap by kind of classical investment banking standards. Corporate balance sheets are strong, the economy's turning around, and it's really cheap to borrow money and acquire. So I think you'll see a lot more of this.
Shares of Barnes & Noble are up more than 35% in the past month. Jeff Fisher, what in the world is going on at Barnes & Noble that is resulting in its stock being bid up like that?
This is really a tale of two companies, Chris. It's Barnes & Noble and its new Nook Media LLC division. Microsoft just finalized a $300 million investment in Nook Media that valued Nook Media at $1.7 billion, which is more than Barnes & Noble itself is worth. It has a market value of $1.4 billion right now, enterprise value. So as the majority owner in Nook Media, Barnes & Noble stock went up because this one little division of the company is worth more than the whole market cap of Barnes & Noble itself. So there's a lot of promise in Nook Media, but we have to keep in mind Microsoft as well is not the most savvy allocators of capital in the past. Remember, they bought Quantive for $6 billion and discarded the technology not long after. But what's interesting here, it really is two companies, Nook and Barnes & Noble, and everyone thinks Barnes & Noble is doing horribly, but last quarter, same-store sales were up 4.6%. There was an 8% jump in physical book sales last quarter, and EBITDA grew 88%. So the business itself, the core book business, is only trading at about 3 times EBITDA. So these nearly 700 stores are doing pretty well, actually, on recent results. And now you have Nook Media as well adding value.
Do you think that at some point they just start to get a whole lot more aggressive in terms of making their footprint smaller and just saying, you know what, we got to get down to like our best 300 performing stores, close a lot of the others, and just bet even more on the Nook?
If they need to, I think they will. But after Borders bankruptcy last year, and now a lot of people like Sam's or Walmart are stocking fewer books, actually, fewer physical books. Barnes & Noble's is alone as the only nationwide retailer of a wide assortment of printed materials, books, magazines, what have you. So they could be able to pull it off as the sole, last man standing.
And finally, Kellogg's is recalling mini wheat cereal in the United States due to possible contamination by pieces of metal mesh. We're talking about 2.8 million packages of cereal. It's going to cost Kellogg's about $30 million. Again, Joe, it seems like when you look at Kellogg's and how big it is, it's a drop in the bucket. And yet, as someone who, up until I saw this news, did have a box of mini wheats in his house.
What'd you have for breakfast?
Believe me, that went right in the trash. Metal mesh, that's just, I don't know. It just seems like it's not going to be monetary damage. It's going to be brand damage.
Yeah, well, as a consumer of frosted mini wheats, it may already be too late for me, but I'll try and pass on this advice that sometimes the best time to buy strong consumer brand companies is when they have missteps like this. I think Johnson & Johnson has been a good example at different points in the past and recently as well. And, Coca-Cola has kind of stepped in it before in the same way. And, in this case, it's not a huge deal. It's not something I would freak out about, unless you've been eating mini wheats.
The number of recalls that we seem to be getting on almost a weekly basis from a variety of industries is disconcerting. And I wonder, is it because we're being better at identifying things that need to be recalled, or are people
metal mesh, for example?
Are our manufacturing companies really just getting more lax and more lax and more lax? And it's seems to be a new one each week.
I love that the Kellogg CEO said that it's okay. We can spend the $30 million. It's going to be offset by the revenue we're going to make from our latest Pringles acquisition. And Jonathan Shipley, a listener in Seattle, emailed to point out that Pringles, just in time for the holidays, launching 3 new flavors: pumpkin pie spice, cinnamon and sugar, and white chocolate peppermint. I absolutely don't want anything to do with any of those things.
I so want the white chocolate peppermint. That sounds awesome.
In a potato product?
Look, I live dangerously.
It's a great stocking stuffer, isn't it? But like Joe and I were saying before the show, it's like they just ripped off the Starbucks seasonal flavors.
Yeah.
We got a few minutes left. Let's get to the stocks that are on our radar this week. We'll bring in Steve Broido from the other side of the glass with a question for you. Ron, what's your stock?
My stock is near and dear to Joe's heart. It's UPS, ticker symbol UPS. Dominant package delivery company. I think dominant is a fair term, right? Mm-hmm. Certainly benefiting from online shipping and will continue to benefit as the economy recovers, aggressively expanding overseas, whether it's China or Brazil or Mexico. Large footprint, great margins. So I think it looks cheap here. I'm digging in. Joe thinks it's worth $91 or so. It's at $72 now. I like the 3% dividend as well. So this is one that has really got me interested.
Steve, question for Ron about UPS?
Haven't people been buying stuff on the internet now? It seems like they've been doing that for so long. Are there more people coming to the table every day to support growth in UPS?
Yeah, I've got a stat
Joe?
on that. Only 8% of U.S. retail sales are done online, so there's still a pretty long runway ahead.
See?
So just to be clear, you're taking credit for the point that Joe just made.
Yes.
Fair enough. Jeff Fisher, what's your stock this week?
Gentex, the ticker is GNTX. We recently bought shares in Pro. They produce auto-dimming mirrors and side view mirrors for cars. They sell to most of the major automobile manufacturers. The stock has recently gotten clocked because one of their key growth initiatives is a rear camera display that's in the actual rear view mirror. And some manufacturers are saying they prefer an in-dashboard rear camera display. And everyone should know new cars starting pretty soon are going to be required by this law, if it passes very soon in December, to all have a rear camera display so you can see what's behind you when you're backing up.
Steve?
What are some growth opportunities outside of mirrors for cars for this company?
One great question. One is Smart Beam, and that is a sensor in the front of a car that senses when your beam should be on high or low and can even move the beam when you're going around corners. And it's a
Also,
smart
grocery
beam.
carts.
They're also making auto-dimming airplane windows for airplanes now.
See, they got a lot going on at that company.
Yeah, they do.
Joe, we got about a minute left. What's your stock this week?
Wells Fargo, it's got a 2.6% dividend yield. The stock stumbled on bad news today that I actually don't think was all that bad. They're doing a great job of winding down all the bad loans they got from swallowing up Wachovia, and I think as they shake that off, the market's going to be willing to pay more for the stock.
And the ticker symbol?
WFC.
Steve, question on Wells Fargo?
Does Wells Fargo still have the logo with the sort of horse-drawn carriage?
Yes, it's the wave of the future.
Just wanted to clarify.
So-
Love that logo.
So, Steve, you're saying the horse-drawn carriage, maybe a bearish indicator?
I think tomorrow.
All right. Joe Mager, Jeff Fisher, Ron Gross. Guys, thanks for being here.
Thank you.
Thanks to our special guest this week, Jerry Morrell, the founder and CEO of Five Guys. That is it for this edition of Motley Fool Money. Our engineer is Steve Broido. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you next week.